What is going on, guys? Welcome to Stock Talk with Nico Criticos. Today, we're going to do some stock analysis on Chipotle because I went there to eat today and it just got me thinking about a lot of different things about the company. So, let's break down what is going on with the stock. First off, the stock peaked in 2024 at about $65 a share. We are all the way down to $32. As you can see, I have 55 shares here at about $41 a share. And the market cap on this company is $44 billion. Okay. So then let's break off into their numbers here. Revenue is growing at an average of about last year it only grew 5%. The last 5 years it's averaging 15%. So anywhere between 5 and 15, but they did 11.9 billion in sales. Okay, so price to sales of 3.6. That's around average. Nothing wrong with that. And net income is at the last year it was kind of flat. They only did $1.5 billion for last year, which really is, it's just okay. Free cash flow of 1.4. Then we come down, let's see, EPS of $1.14. Okay, again, it's been flat now for a year. Just their margins have been hit. There's a lot of inflation in the ingredients and stuff that they use. So that's been a big contributing factor. Then we take a look at the share buyback program here. They bought back 3.5% of shares, which is pretty solid. We can come down here to valuation, one of my favorite charts to look at. Last 5 years here, you can see the PE has gone from 100 down to only a 28 right now. This is a historic low, by far the cheapest it's been in the last 5 years. Okay. Free cash flow yield, same thing, almost at an all-time high, 3.5%. Price to sales, same thing, cheaper than where it's been pretty much for the past 5 years. It's only 3.5 times sales. Because Chipotle used to trade rich, when it was at 7 times sales and stuff, that was expensive for this company. So that's the numbers, okay? Also, Chipotle total locations, that's an important number too because they are really trying to expand that, adding a couple hundred stores a year, I think 350 or something. But right now they're at about a little over 4,000 stores. And real quick, when I mentioned today I went to Chipotle, I've been to a couple different Chipotles, like even in different states and stuff in the country. But basically, there is definitely last year there was this narrative that there was competition. That was one of the things taking away from this company. And last year I went to Cava and I've been to a lot of these restaurants that are similar to Chipotle, and they're good too. I like Cava, I like BB Bop, I like some of these other restaurants. But with Qdoba, I will say Qdoba is not that good. I would say Chipotle is definitely beats Qdoba, but that's not the point. The point is that there's tons of customers going to Chipotle. When I was there for 2 hours today, and we watch people go in and out constantly, so that is not a problem by any means. A couple months ago, the CEO mentioned, "Oh, we're really focusing on the higher income consumers because most of our consumers make 100 grand a year." I don't think that was not the case for even the people that were coming in there. That was not the case. Okay, I don't think every single person walking in there today was making over 100,000. So just keep that in mind. But then let's break out into analysis. They have estimated 8% growth this year for revenue, and then it's supposed to jump to 11%, which is very nice. GAAP EPS is supposed to be flat. Again, we're going to get to the margins and why the net income and stuff is not going up, but their sales is going up, and then next year is supposed to be when the profits and the margins kick in and get a little bit better because of efficiency and technology and all this stuff. So we're looking at, let's say, $1.14 this year again, and then $1.36. Okay. And I think in a couple of years from now, they're going to be doing $2 at EPS, right? I see them growing for, whatever, at least another 5 or 10 years, they have growth ahead. But the important thing is let's break down into this. So, first fact, over 37% of sales for Chipotle are now digital. Their second make lines allow them to process high volumes without slowing down the in-person experience. And this is very noticeable. Not only do I use it a lot, but I see lots of other people using it a lot. Then we have the Chipotle lanes. This is the company's highest margin format. About 80% of new stores now feature these digital-only drive-through lanes, which again, I've seen them add new locations with this drive-through. It makes a huge difference, makes more people interested. It's the fastest, healthiest, and one of the most affordable things you could go out and get. Even during the inflation spikes in the last couple of years, they have maintained best in class traffic because it is still perceived as a high value, healthy meal to traditional fast food. That's what I said. The rollout of the high efficiency equipment package this year is their newest moat builder, using AI and advanced hardware to cut prep time and improve throughput during peak hours. Okay, great. So once again, projected EPS $1.15, $1.38 next year, $1.34, $1.64 in 2028, blah blah blah. But here's the important thing is the margins, because again, revenue is growing 8% this year, 11% next year. And again, there is customers. People like the food. The product is good. The prices are obviously not that bad. And again, especially with the drive-through makes me want to go there more. It makes more customers more likely to stop in there. The app, the way you can order on the app and everything, it's super convenient, super easy, super fast. The meal's under $20 and it's quick and healthier than most options. So that's why I'm bullish on that aspect. But again, you have to still have high margins, right? Which that's where the Chipotle lanes and this technology comes into play. I do have one thing I'm concerned about, which I'm about to address, but basically the point is that margins need to continue to expand. They need to expand over the next couple of years while revenue is growing, because that's how we're going to see higher earnings, higher stock price. So the analysts expect the return to go to 27-30% restaurant level margins in 2 years. Therefore, the stock price predictions for next year is around $50, and then 2028 is around $60. And their goal is to reach 7,000 North American units when they have 4,000 now. So they are definitely adding, they're trying to add over 300, definitely over 300 stores a year, that's for sure. A valuation near $60 would align with historical multiples of 30 to 35. Okay. The Chipotle story will also shift from domestic to global. The Middle East partnership is expected to double its footprint next year, providing a new growth engine. Right? We haven't even mentioned that, but that's another great catalyst, another possibility, more potential for the stock. Management is obsessed with seconds per transaction, and their goal is to consistently handle 30 plus transactions, blah, blah, blah. Okay. And then let's move down here. I want to look at what their margins are expected to be. After dipping to 23%, next year it's expected to be still about 23, or this year it's 23%. Next year it's supposed to be closer to 26%. Okay. Operating margin of 17 and a half. And then 2028, we're looking at 28% restaurant level margin, 18.5% operating margin. Okay. So, and you can run the numbers on that, but basically the stock should be like $60 plus. So here's the interesting things now. We're going to get to what are they doing to innovate, and what are they doing to innovate? What are they doing to improve margins? And why am I kind of skeptical on part of it? The high efficiency equipment package is currently being rolled out. Next year, this is expected to be in most stores, reclaiming 2 to 3 hours of labor per day. Fantastic. That's great. The augmented make line, Hyphen. By 2028, we're expected the wider integration of the Hyphen cobotic system, which automates the assembly of bowls and salads, which makes up 65%. Okay, yeah. This reduces human error by portion control and significantly cuts the labor cost per bowl. Okay, this is where I'm somewhat skeptical, because what happens is sometimes when companies try to integrate technology and, speed up the process or make it cheaper or whatever, it lowers the quality of the product, or lowers the quality in this case of the food, or there that's why when I read reduces human error, yes, that's true, they do mess up sometimes, but I kind of feel like the robots are going to mess up too, to be honest. Here's on their website a little bit more of a breakdown. So the cobots are assisting crew members in Chipotle restaurants for the first time, and the product development company that has co-created Autocado and Hyphen. Okay, so it's going to automatically make guacamole. And okay, the Autocado is already working in Huntington Beach. Blah 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 blah. Okay, it's going to help crew members and margins, and that's all great if it works. If it works, okay, well then obviously we're going to have higher earnings and higher stock price, and everything's good. But I don't know. I need to I guess I could watch some of these videos and maybe see if is it making mistakes? Is the quality of the guacamole and everything still the same? I just would there's some things that humans are going to do better. Little details and stuff. I could just see robots possibly messing it up. And then it's really going to, kill the stock price and the margins if they have to go back and erase this stuff and take a step back to figure out why the technology is messing up. It happens with a lot of different technologies and AI right now. Um, Blah blah blah. Okay, so on average, it takes avocado approximately 26 seconds to fully flush out the fruit inside an avocado. See, and I don't know. I guess that could work. I mean, what if it doesn't what if it takes some of the what's it called? The crust, the outer layer of the avocado into the guac or something. I don't know. Chipotle locations across the US, Canada, blah blah blah, are expected to use approximately 5.1 million cases of avocados, 130 million pounds of fruit. So, meaning the machine recognizes variability in the fruit, automatically adjusts itself to accommodate the size of the avocados being loaded. Okay. I got to see this. I got to see a video of this. Chipotle's augmented make line, created in a collaboration with Hyphen, uses automated technology to build bowls and salads, while the employees operate the top make line to make burritos, tacos, quesadillas, and meals. 65% are bowls and salads, so it can improve employee efficiency. So that basically that's what that is. Okay, and like I said, I need to see it work, basically. I need to see it work, and I need to see it make the guacamole right, make the bowls right, don't mess up the orders, all that stuff. That's what I'd like to see. Since Chipotle lanes have higher margins than traditional dining rooms, as they become a larger percent of the total store count, 80% of new builds, average margin of the whole company actually rises. Great. Okay. Chipotle is dealing with a pricing to inflation. They are only raising prices 1 to 2%, while inflation is at 3 to 4. If beef and avocado prices don't stabilize by next year, the gap will continue to eat. Okay, and I think they will stabilize. The CEO has stated that about for recovering transactions or customer count is their focus, even at the expense of margins, which, okay, I guess you can argue that that's fine for the short term. If they can't get people back in the door by next year, they won't have the volume leverage needed. Sure. Then they push into the Middle East, Mexico, Singapore next year. The initial overhead of setting up supply chains in these new markets will temporarily weigh on the corporate operating margin, which I hope that the margins aren't still down for another year or two. But like I said, I would say most of it is good. To me, mostly I'm bullish because, like I said, people like the product. Like I said, the people like the product. It's healthier, it's fast, convenient. They're building a lot more locations. I believe comp store sales, though, I think it was down 2%. That's the only bad news. And like again, that could just be for a short-term thing, though. That could just be because of inflation and the economy and stuff like that. And I mean, really, your store sales could be flat or go down 2%. And if you add 1,000 new stores, if you go from 4,000 to 7,000 stores over the next 2 to 3 years, well, your numbers are going to be way up anyways. But again, I don't think comp store sales are going to be down 2 or 3% every single year for the next couple of years. So that's kind of the way I see it. I'm going to do some research on the robots and stuff to see are they actually making the guacamole right or what? Because that's a big deal for me when I go there. So I am going to research that. But other than that, let me know what you guys think down below, and I will see you in the next video.